Hey everyone, and welcome back to the show. So, in today's episode, what we're going to really be looking at is, are stocks dead? So, there's a lot that has been happening for the past year so far. There's a lot that was expected that has not been met so far, and investors right now are really uncertain. They're more fearful than anything as to what really is happening, because once you look at the data, once you look at the markets, you realize that it literally is all over the place. So markets are currently on a downward trend. So there was only one uprise in the market, and that was between Thursday the 2nd up to the 6th, which was a Monday. And then since then, the market has been downward trending ever since. So the S&P 500 is down about 1.02%, while the NASDAQ index is down 1.85%. And you might be wondering why this is the case. So the jobs report actually came out on Friday, and the report stated that the jobs earnings were actually at about 212,000. So 212,000 new jobs were created, which actually beaten analyst expectations of 153,000. This was far outweighing it. And on top of that, the unemployment actually has fallen from 4.2% to 4.1%. The CPI is down to about 2.7%. It's still below that 3% mark. And the interest rates has remained unchanged since 2024. So with data like this, you might be saying, this actually seems really well, this seems great, so I don't understand why the market is behaving the way it is. And to be honest with you, the market investors right now are really just uncertain as to what is happening in the market, what is going on. 2024 actually was one of, if not the biggest test for stock traders, stock investors, and the stock market overall. So from 2020 up to 2024, the last almost half a decade, there was so much happening on the markets. There was the rising inflation, which was at the highest in over a decade. There was interest rates that actually was high as well too, and there was just so much happening. Unemployment was high. The entire economy was appearing to be in shambles. And then things started happening towards the latter part of it. So around 2023, 2024, the inflation actually started coming down. Interest rates had finally come down in 2024, and it was long overdue. It was a small amount that came down though, 0.25%, so 25 basis point came down, but it's still nevertheless it is great news considering what the entire economy, what persons living in the economy had experienced. And jobs were all over the place. Unemployment was high, and now it's finally down to 4.1%. So with the data coming, appearing that way it is, everything is being seeming rosy and great. Why is the stock market doing so poorly? And this really is because investors right now are unsure as to what is going to be happening in the future. And Warren Buffett, the greatest investor, always says he buys stocks when everyone else is selling, and he sells when everyone else is purchasing. So what that means is, to relate it to our times, when the market is confident, that's when you should consider repositioning your portfolio. So closing out or lowering some of your investments. And when the market is fearful, that's when you want to actually start purchasing more, because when fear arises, volatility increases, and when volatility increases, share prices tend to be overly traded, and so the falls in the stock prices actually become greater than what they should be, and so the actual intrinsic value and the actual price of the stock, there becomes a disparity in them, meaning that what the stock is worth and what you can get it for on the market right now, there's gonna be a discrepancy with them. That's really what that statement is saying. So, is stocks dead? No. Honestly, there is no right or wrong answer to that. I can't say yes and I can't say no. What I definitely can say is that these are exciting times to be on the market. Like, the more fearful persons are, the more that things tend to fall, the more that persons stay away, is when I start going into the market, and that's when I start increasing my positions in companies that I hold. And this is because I did my necessary calculations already. I looked at my ratios and I did everything already. And once I'm happy with what I select and what I'm gonna purchase into, then it's just a matter of time of waiting and starting that purchase. And when the market is fearful and everyone is selling off, that's the best time to buy, because that's when you get the best deals. And so when the market starts to recover and persons start becoming more confident, then those stocks that I would have or you would have personally purchased during those fearful moments are actually gonna start doing well. And you can either consider holding on for future, or you can actually sell out and start lowering and closing positions in certain companies. And also, just to add as well, so Robert Kiyosaki actually made a post on his Instagram earlier this week where he shared that cash flow is actually available in any economy, and you should not say that you're unable to cash flow where you are, because it is possible to cash flow in any economy. It's just a matter of your level of experience, your level of willingness to actually go into these assets. And I just say that to say, right now, with everything that's happening, considering getting stocks that pays regular dividends is actually one of the directions that you definitely can look into, you can go into. So dividend paying stocks essentially is what I'm saying, that during times of high uncertainty tends to become more favorable. And this is because when the stock prices become more volatile, you want to ensure that you have some sort of stability. And so when you have that stability, you want to actually just take those funds that you'd be earning back, so the cash flow that you'll be getting from your dividends, and you can either purchase more stocks, you can purchase additional stocks, or you can move it to another asset class or spend it however you'd like. And given that this is investing and an educational channel, then the best recommendation would be that if you are gonna pull the money out of the stocks, then it would be best recommended to put that into another asset class that can either maintain its value, grow its value, or actually produce more cash flow from it. And these are the reasons why I love stocks. Now, when you look at real estate, most persons think about real estate as cash flowing because that's really what they do. They purchase a single family home or a multi-family home or a commercial property, and they, depending on the amount of funds you have and experience, you might refurbish it or you purchase a brand new place and you rent it out and you get the tenant to actually cover that mortgage. And if you apply that same mentality to the stock market, you can actually be winning in the markets. And the difference with real estate and stock is that with real estate, you need to have about 10 to 15% or even more of the value of the property readily available, so that when you are close on the deal, you can actually pay that over. And then on top of that, you need to actually have a renovation budget, and these cost hundreds of thousands of dollars. When you're considering stock trading now, you can start as little as a few dollars. Some persons start with $50, $30, and the amount that you are able to invest is infinite, and you don't need to actually borrow to invest in the stock market. So if all you can afford is $100 or $500 or $1,000 on a regular basis, and that is like monthly, bi-monthly, then by all means it's better to put a regular amount of a fixed smaller portion than a lump sum once or twice for the year. So if you have or you are able to put in $500 every single month in the stock market and purchase stocks at $500 each month, every single month, and you do that for 12 months, that is $6,000 that you would have invested directly in the stock market. Now, let's say that you decided that you wanted to do one large investment, and you said, all right, I'm going to put that $500 in another account, or I'm going to leave it in the account untouched, or put it under my mattress, as some people would say. And you're going to make that one lump sum $6,000 investment. Now, the trick is you'll never get that $6,000 investment, because just the fact that you have that $500 there, whether it's in another account, it's in your person, or you leave it in the account, you're gonna be tempted to spend it, and more than likely you are gonna dip into it, because the mindset is that you're gonna actually borrow from it and put it back, and you're never gonna put it back. And so this is the reason why most persons don't get started in investing, because they said they're gonna wait to have that $6,000 saved up at the end of the year. And if they really are trying and they're disciplined, maybe they might have $4,000 saved up. But a lot of the times, it will be less than 50%. So less than $3,000 that they would have saved up. And so by investing a regular amount of that $500 every single month, you'd have actually reached the goal of the $6,000. And then on top of that, you would also be benefiting from compounding on the investment. So if, let's say, what's happening right now continue, so the market is down between 1 and 1.85%, so call it 2%, and let's just say that the market reduces 1 to 2% each month, every month. So that means that you'd be compounding the losses. So if you are anticipating that the market is going to be falling 1 to 2% every single month for the remainder of the year, then why would you not start focusing on actually investing in stocks that actually pays you back on a regular basis, whether it's quarterly, monthly, semi-annually, just regular investment, and the dividend yield is also great. So, and dividend yield being great is anything that's above inflation. So right now the inflation is at 2.7%, and you can actually get dividend yields over 5% right now. So why would you not want to keep investing on a regular basis in these dividend stocks? So what that really would mean is that each time, so let's say, using back the scenario, so each month you're losing 1 to 2% in terms of the actual value on your investments, and you're investing in a dividend stock, and this dividend stock holds constant the dividends paid, or they actually are raising it each year. Now, what is actually going to be happening for you is that each month when you're investing that fixed amount of $500, you're actually going to be getting more and more units in that investment. And also what's going to happen is that your dividend yield is also going to be increasing. So with dividend yields increasing, that means that the amount that you get back is also going to be increasing as well. And then once that amount that is increasing, you can decide whether you want to take that actual dividends and reinvest it in the stock market, whether you want to invest it in another stock, or whether you want to invest it in another asset class that can either hold the value, grow the value, or give you cash flow from it. And so I actually had done an episode on Pfizer before, so I'll link it in the description. And what I did was speak about, is Pfizer a good dividend stock? And I looked at the whole history and everything. So if you want more details on that, feel free to check out that video. I'll link it in the description below. And so with that being said, with the markets continuing on how it is right now, are stocks dead? There is no right answer for that, but what I definitely can share with you is that once you have a winning strategy, once you stick to that winning strategy, and once you are consistent, then it's gonna be exciting times for you, for me, and for all the true investors out there. So thank you guys so much for checking out this episode. If you like it, I'll just ask you to give us a thumbs up or a heart wherever you consume this material. Discuss it with your friends. So share this episode with a friend, a family member, a loved one, and have that discussion with them. And leave any comments you might have down below. And also, don't forget to subscribe or follow so that you do not miss out on any new episodes as soon as they are launched. Until next time, take care. Love you guys. Bye.